why don't we take a little bit of a look at just nationally, what have you seen in the last 6, 7 months in terms of rent growth and maybe with some of the drivers behind that? I know housing affordability being one of them, and just supply to available housing. Be a little commentary on what you've seen there.
Sure. Yeah, the Southwest and West is, all the way from Dallas to Vegas to Denver are looking very hot right now. And the reason for that, there's migration patterns, not only of the millennials or the Z type generation, which is the primary renter of the future, replacing the millennials, but also you got boomers. Boomers are making up a larger and larger percentage of renters that are driving the rental market in terms of they divorce themselves, if you will, from the maintenance and cost of maintaining a home or single family, and they move into rental engagements, especially in those kinds of cohorts or communities that foster that. Rental communities that have that kind of demographic. And so we see a lot of that going on from a migratory standpoint. We also see boomers. What's interesting is boomers like to go to the central business cores. In terms of where you live and things like that, you'll see a lot of boomers populating these central business districts as opposed to the other millennials, which are, primarily in exurbs or things like that or around major university hubs.
And now, if we look at the numbers behind that in terms of some of the fastest growing rental markets nationally, year over year, up 10%. Again, Phoenix leading the charge, over 20%. Those numbers, like you mentioned before, if you look at that time adjusted, kind of taking into account the lost year of 2020, maybe those numbers are tempered a bit more, trending up from 2019, but still, those are pretty substantial numbers in terms of rent growth. So maybe walk us through some of the faster growing rental markets and what you guys are seeing there.
What we're seeing is the lack of, housing availability,
Hmm.
especially as the millennial generation looks to find that if it is not present, they're going to continue to rent. So that's number one. You see it in Vegas, you see it in Denver. And it's also wage growth, has been moving up. It took a slight dip in 2020, but that was because of the employment situation with the pandemic. But it has been moving up as opposed to before that. And so wage growth is slowly increasing, but probably not as quickly as the rent growth is. But we see that as the ability for will eventually stabilize. It's a transitory thing that probably over the next 12 to 14 months, you'll begin to see the stabilization of rents begin to come down a little bit more because of the initial surge, if you will, people that want to move or renew and things like that in terms of rental opportunities where they can get more for less, things like that. And also the population migration is occurring to jobs, workforce is moving to those type of jobs in cities where, there is a greater degree of employment.
And now, when you mention the stabilization, do you think that'll be just a slowing of the growth rate year over year, or will that be actually, have we will we yo-yo back, right? Have we gone so far in terms of this supply demand imbalance that's pushed it up? So it'll be you're not seeing necessarily a pullback
No,
of where rental
more
rates
of a
are, but just a
slowing.
slowing of that growth. Okay.
Yeah, because again, it's a good game. It's a less risk-free game. It's good return on your money, so that's where you're going to find it.
Hmm. And I mean, looking through, and again, listeners out there, I'd highly recommend downloading the report if you haven't already. When you listen to the episode here, it seems like these are fairly well geographically spread, right? You've got Phoenix, Tampa, and just kind of going from the top down: Phoenix, Tampa, Vegas, Miami, Inland Empire, Raleigh, Atlanta, Charlotte, Austin, Sacramento, Nashville,
Hmm.
Denver, Portland. So I mean, it seems like it's a pretty well geographically diverse trend that you're seeing here in these faster growing markets. Is it a reflection of some of the migration patterns, or is it again, kind of rising tide thing? Do you
Definitely
see
the migration.
concentration?
Yeah, definitely the migration patterns. Also, that we're seeing a lot of movement in terms of where people, come from and to in terms of headquarter moves. Disney just relocated to Orlando with 2,000 workers or planned to. And so what you see is headquarters, that are changing and obviously taking workers and increasing the workers' sensitivity where they want to live. Certainly tax inputs have a definite you know, impact on the taxation. The northeast is typically seen as a higher taxation
Hmm.
area as opposed to the southeast, right to work laws and things like that. So you have a little bit more liberal, progressive type of folks, and you also have those areas like Denver and Orlando, where in Miami, where the policy folks are coming together and the governmental folks are coming together to be able to incent and to bring employment and the economic diversity and engines necessary to bring renters or homeowners to their particular area. So that's part of the migration pattern that you see.
And what about some of the gateway markets, major metros? There was a lot of talk about the migration patterns out away from the more urban gateway markets. Certainly last year, right? This time last year, it was that was a lot of talk about that. Have you seen that reverse or stabilize? Where's the out migration from gateway cities? What's that looking like?
That's an excellent question because in the next 2 days, our Rent Cafe, everyone should look for. Rent Cafe is going to come out with a link on that very question, the suburbs. And so suburbs or even further. So Pete Linneman, has talked about the fact that, look, cities aren't going to dry up and blow away. They're there. Jeff West has written a particularly great piece. It's called Scale. That's the book. And it talks about the economic diversity that goes on cities and bringing people together in terms of how that occurs as opposed to secondary or tertiary markets. Not to discount secondary tertiary markets, but there's a lot more synergy in large metropolitan MSAs than there are in terms of secondary or tertiary markets. Notwithstanding, though, there's a lot of development that goes on in those, but we've seen a lot of international investment in the secondary and tertiary markets because they're trying to stay ahead of competitors. And so people are re-engaging with investment. Look for the West Coast, Southwest, the markets along the whole West Coast to begin seeing a lot of North American type of investments. I think North American investments probably right now for the monies. CBRE just did an analysis of it, but about 60 to 70% of the investment in terms of commercial real estate right now has been from the North American continent, very, very little from the European and Mideast.
Hmm. And that being a change from what we had seen the last 6, 7 years.
You saw a lot of Asia Pacific stuff that
Yeah.
came in, especially on the West Coast, and that has been diminished for various reasons, policy and things like that. So,
Hmm.
but that doesn't necessarily negate the fact that there's still investment coming from the outside world. It's just that they're looking at a little less competitive areas, like in secondary, tertiary market.